This article aims to provide a detailed and informative guide for real estate investors looking to secure a debt service coverage ratio (DSCR) loan in Florida quickly. We will explore the benefits of DSCR loans, how they work, the calculation of DSCR, eligibility requirements, and the application process. By the end of this guide, you will have a clear understanding of how to leverage DSCR loans to grow your rental portfolio in the Sunshine State. Introduction to DSCR loans in Florida. The real estate market in Florida is booming, making it an ideal destination for real estate investors. With home values increasing, a surge in rental demand, and a shortage of housing, purchasing investment properties in Florida has become a lucrative opportunity. And when it comes to financing these investments, many investors are turning to CambridgeHomeLoan.com for DSCR loans. DSCR loans, also known as debt service coverage ratio loans, are non-qualified mortgage, non-QM, loans designed specifically for real estate investors. Unlike traditional mortgages, DSCR loans do not require extensive documentation of personal income, employment history, or tax returns. Instead, these loans focus on the property's income potential to determine loan eligibility. Understanding how DSCR loans work. DSCR loans are primarily intended for investors who want to generate rental income from their investment properties. The key requirement for qualifying for a DSCR loan in Florida is that the property's projected net operating income, NOI, must be greater than its annual debt obligation. In simple terms, the property must generate enough income to cover the mortgage payments. To calculate the DSCR, you divide the property's NOI by its annual debt payments. For example, if the NOI is $50,000 and the annual debt payments are $40,000, the DSCR would be 1.25. This means that the property generates 25% more income than required to service the debt. Benefits of DSCR loans in Florida. 1. Simplified loan process for DSCR loans in Florida. Unlike traditional mortgages that require extensive documentation, DSCR loans have less stringent requirements. 2. The DSCR loan process is quicker and more streamlined, allowing investors to secure financing faster. 3. No personal income verification. DSCR loans focus on the property's income potential rather than the borrower's personal income. 4. Flexible loan terms. DSCR loans offer flexible terms and options to suit the investor's needs. 5. Borrowers can choose from full 30-year terms, interest-only options, rate buy-downs, and different rate structures. 6. Higher loan approval limits. Unlike traditional lenders that often limit the number of financed properties, DSCR lenders evaluate an investor's maximum credit exposure using common sense. 7. While conventional loans may require complex income statements, bank statements, and employment history, DSCR loans primarily focus on the property's income potential. Analyzing the property for DSCR loan eligibility. When evaluating a property for DSCR loan eligibility, lenders focus on the property's income potential rather than the borrower's personal income. Here are some key factors lenders consider during the analysis. Potential rental income. The first step in analyzing a property for a DSCR loan is to calculate its potential rental income. This can be done by estimating the monthly rent and multiplying it by 12 to get the annual rental income. This figure provides an initial assessment of the property's income-generating potential. Operating expenses. Next, it's important to consider the property's operating expenses. These expenses include property taxes, insurance, repairs, and any other costs associated with maintaining the property. Subtracting the operating expenses from the annual rental income will give you the property's net operating income, NOI. Debt service. To calculate the debt service, multiply the loan amount by the interest rate and add any monthly principal payments. This will give you the monthly debt service, which represents the amount required to cover the mortgage payments. Debt service coverage ratio, DSCR. Finally, to determine the DSCR, divide the debt service by the property's NOI. The resulting ratio will indicate whether the property generates enough income to cover the debt obligations. Most lenders require a DSCR of at least 1.25, indicating that the property generates 25% more income than required for the debt payments. At CambridgeHomeLoan.com, we can lend on a ratio as low as 0.75. Qualifying for a DSCR loan in Florida. To qualify for a DSCR loan in Florida, investors need to meet certain requirements. Here are the key factors that lenders consider. Credit score. Most lenders require a minimum credit score of 620 to qualify for a DSCR loan in Florida. Down payment. Investors need to have a down payment of at least 20% of the purchase price. DSCR ratio. The property's DSCR should be at least 0.751.25 to meet most lenders' requirements. Eligible property types include 1 4-unit residential properties and 5+ unit commercial properties. The property must be used for long-term or short-term rentals. It cannot be a primary residence. Securing a DSCR loan in Florida involves a straightforward application process. To APPLY https://www.cambridgehomeloan.com/derloan. CambridgeHomeLoan.com is experienced in working with real estate investors and offering competitive loan terms, easy paperwork, and fast close. Securing a DSCR loan in Florida with CambridgeHomeLoan.com can be a game-changer for real estate investors looking to grow their rental portfolios. With simplified loan procedures, flexible terms, and a focus on property income rather than personal income verification, DSCR loans provide an excellent financing option for investors in the Sunshine State. By understanding the calculations, eligibility requirements, and application process, investors can leverage DSCR loans to maximize their investment potential in Florida's thriving real estate market. Get started on your DSCR loan in Florida today. To apply, https://www.cambridgehomeloan.com/derloan.